Hey guys, so I know you're excited. You're probably thinking, yes, Kenya is about to show us how to mark up a chart. Let's go, let's do it. And you're absolutely right. I'm about to show you how to mark up a chart because you're probably an existing trader, or maybe you're a new trader and you see all these traders marking up their charts and you're thinking, I need to learn how to do that, but no one is breaking it down for me simple enough to where I can understand, right? Trust. I know because that was me when I first started out. Now I've gone through a fantastic education platform, iMarkets Live, and there's just so much to learn in trading. It can get overwhelming. You're seeing people who are doing all these fancy things, and you just honestly, I like keeping it really, really simple. And I'm going to show you how I do it and what has worked for me. Okay, so I'm going to show you step by step how to mark up a chart, why we do it, and what are we doing when we're doing it? What's the psychology behind it? That's so important to understand. So while I show you an example chart, make sure you go ahead and click subscribe to stay up to date on our channel. Also, join our public Telegram. The link is in the description of this video. If you haven't started trading and you want to join our education academy through iMarkets Live, that link is in the description on how to get started as well. I'll contact you right away. So let's go ahead and we're going to take a look at Euro USD. Now, as Forex traders, we trade the Forex market, which is open 24 hours a day. Woo-hoo, hours a day. But I trade during high volatility times. I'm not trading all the time. I'm trading when all the action is right there in the market and I'm trying to get my piece of the pie. So when you mark up a chart, the very first thing that I recommend is that you want to find a few currency pairs that you really like. And in the beginning, as a new trader, you're going to probably have to try a few to see which are better for you during the time that you trade. So for example, if you trade the London session because maybe that's where you live, then you might be trading more of the Euro pairs. Or if you live in the US, it just depends where you're located, what your schedule is, all those things are going to factor in. But the Forex market is open 24 hours a day. It closes on Fridays at 5 p.m. EST and reopens on Sunday at 5 p.m. EST. So what I recommend is a few hours before the market opens on Sunday, you want to go through and mark up your charts. And when I say mark up your charts, the very first thing that we want to know is how is the market trending for this particular currency? So if we look at Euro USD, we want to know, are we in an uptrend currently? Are we in a downtrend? How has the market been trending? So that's the first thing we're going to look at. And then the second thing is that we want to mark our key support and resistance levels. And I'm going to go through that and talk about why we do it. So first, let's go ahead and we're going to go ahead and define the overall trend. So looking at Euro USD, excuse me, can you tell if we are in an uptrend or a downtrend? Looking at this, what do you think? Are we in an uptrend or are we in a downtrend? Comment on this video. I want to know what you think. Okay, so we are in a downtrend, all right? And how we define that is if we click here and we grab our trend line, we basically are going to look for swing points that respect our trend line. So as you can see, there's a decline in price to the downside, right? So what you're going to do is you're going to find the highest swing and you're going to start your trend line there. And I always say 1, 2, run it through. Find one swing point, find your next one, and your next one, and just run it through. You want to connect it to all the different swings that are respecting that trend line, all right? There we go. So now we've defined that we are in a downtrend. Now, why do we even look at the daily chart? One of the reasons why we look at the daily chart is because I want you to imagine that you are in a relationship with someone and you're so excited, you just met this person and you talk to them for 5 minutes and maybe you're like, oh my gosh, I'm so in love. Or you're like, they are not it. So trading is just like that, okay? When I first discovered Euro USD and I was learning a strategy, a scalping strategy, I was thinking to myself, Euro USD does not have enough volatility for me. I am out. Then I went to GBP pairs and I was like, woo, this is too much volatility. So it's just funny. Over time though, I love Euro USD now. It is perfect for me. And I didn't learn that until I spent time with this pair and started learning it, and it just clicked with my personality. And so That's the same thing when we look at the daily time frame in trading or the monthly time frame, and we get an overall feel, a big picture for what the market is doing. If I jump down to the 5-minute time frame on Euro USD, look how it looks immediately. It's choppy. It's choppy, it's noisy. You're like, ooh, I gotta fix this. I have to find out more about you because this is just crazy, right? So when you look at the daily time frame, this is what it's giving us. It's showing us these major levels in the market where key decisions were made, who had the strength in the market, whether buyers or sellers had the strength in the market, where there was a turning point in the market. So the big picture is going to give you all of that, okay? So after we define the overall trend, the next thing that we want to do is we want to define our key levels in the market. Now, our key levels, we call them support and resistance, all right? So with support and resistance, this is a part of your basic training. As Forex traders, we look to sell at or near areas of significant resistance. So this would be our resistance along this trend line, all right? Because this is where we want to look. If we're in a downtrend, we're going to look for areas to sell. So if we would have sold here, for example, that's a nice sell that we would have caught, right? Again, the top of the trend line, of course, the better for a sell, because look, if you would have entered up here, you could have rolled it all the way down. Some traders do that, okay? And when we buy, we look at significant areas of support to buy. So for example, if I move over here, and if I were to, for example, let me bring this down a little bit. So this was a previous uptrend over here. So if I were to draw a trend line over here, then we would look for areas of support where we could buy, okay? So after we know what our trend is, the next thing that we want to do is we want to find our major levels of support and resistance. And when we mark these key levels, it's crucial because it's going to help us to make high probability trades. So the very first thing that I do is I like to turn my chart to a line chart. It just makes it a little easier for me, it makes it clean. And then I turn it back to my candles, but I go and I find a horizontal line and I mark my key levels. And I'm just gonna mark some levels and then I'm gonna tell you why I mark those levels. So that's one. And I'm also keeping in mind where price is right now. So if I know that price is around right here, I'm keeping that in mind, okay? But I'm just gonna mark some levels and I'm gonna tell you what my psychology is behind it and why I'm marking these levels. So I'll go ahead and I will mark a level here. And I don't like to crowd my chart with levels, with all these different lines, just to mark them with lines. I mark my levels with levels where I plan to make key decisions, okay? So I'm just gonna put those there and then I'm going to turn this back to my candles and I wanna point out to you why I mark these different levels, these areas of support and resistance. So as you can see here, so we already talked about our downtrend. We know that we're in a downtrend, right? And then what I like to do is I like to go and find tops and bottoms. And so, for example, I'm gonna actually bring this down to about right here. Oh no, I'll leave it right here actually. Okay, I'll leave that there. All right, so let me just point out really quickly why I marked these areas. So here is a valid area. Let's delete that. And let's find another one. Let's see. Where else would, right here. Okay, so you see that? All right, so let me point out something really quickly. So the reason why I marked these levels is because these are areas where price is respecting these levels. These are key major reversal areas where price visited in the past and a decision was made by buyers and sellers. So for example, if we see that price is going short here, this is a major level here. As we can see, let me get an arrow, even here, which I actually pointed to right over here. We can see that price came to around this zone. So when I mark a resistance area or a support area, I'm not saying that I'm executing a trade off this line. I'm basically looking at this area, this zone. So for example, let me just highlight it and you'll see this could be an area where I might want to execute if price goes in my favor, all right? So area. So usually I will highlight it and say, this might be an area where I want to make a key trading decision, whether to go short or to go long. When I say go long, I mean execute a buy. When I say go short, I mean execute a sell. So we look at these key tops and bottoms in the market. So this is a top, this is a bottom, have another top, a bottom, all right? Because these are major levels where buyers and sellers are making decisions. So the thing is that when you mark up these charts, it's going to save you a lot of time. It's going to save you from avoiding false trades that are not from the best key areas. You don't want to force, like, some people are going to mark their support and resistance areas in different places, and that's okay. Everyone's different, and that's why the market is constantly moving, because we're all looking at it different from our own subjective opinion, okay? So what you want to do after you mark these key levels, now you can use the daily levels to intraday trade. You can also use these for your scalping if you want to. So normally what I do is when I define my levels on the day chart, I then jump down. Usually I'm looking on the 1 hour chart, and I can do a lot off the 1 hour chart, but I make my entries on the 15-minute chart. So when I'm looking at the 1 hour chart, some of the things that I'm looking for is I'm either looking for price to move within that area, and I'm looking to see what it does. I also use the MACD, so I'm just going to show you, for example. So if you look here, for example, see how I marked this key level right here? So let's say if it was the start of, let's say, New York session, and there's no high impact news, but I see that price is approaching this level here, 1.12961. It approaches this level, and I want to see how it's going to react, because in the past, price approached this level and a key decision was made. So as we can see, price came here, hit this level, bounced off of the floor, and started to go long. And what was my other confirmation? My MACD was below the histogram, but it crossed up and started, and then it went through the histogram, showing me that buyers had strength in the market. So this could have been a nice buy for me right here, okay? And I could have took this to this next level or next zone. So I trade from zone to zone. Even when I'm using my 4-rule scalping strategy, I like to mark these levels because it helps me to know where to possibly take profit, or reasonable take profit, okay? So again, as you can see, even right here, if you wanted to do a short scalp, you could do on the higher time frame, this is showing a lot more pips, but this is why I evaluate on the hour time frame, and I usually will jump down to the 15-minute time frame, and I'll make my entries off the 15-minute time frame. Now, what you're going to notice is that your support and resistance is going to be a little bit further apart, but the nice thing is that you still have these key levels of where you are basically making decisions. And some of us, we trade something called breakouts, or there's different types of breakouts. You can trade continuation or reversal patterns. But for example, let's say I'm going to find, actually, I'll show you another example really quickly. Let's go to another pair, and I'm going to show you CAD Chef, and I'll show you a simple markup that I had here. So if we go to the 1 hour time frame on CAD Chef, for example, I also mark this chart with key levels. And when I'm marking these key levels, again, I'm only marking levels where I plan to make a trading decision. So the first thing that I did was, especially if you're a short-term trader, you can just look on the 1 and 4 hour and see where the overall trend is at that time. So you can start on the day time frame, you can move down to the 1 and 4 hour for your intraday trading, or at the start of a session, and you can see, has price broke a trend line? So for example, you'll see that I drew this trend line here, price broke, and look at these levels that I created. And what did it do? It broke and it returned. Look left for clues. So see here in this area, let me just show you right here, this is where price tested previously. So that gave me clues as to where price possibly would go after breaking this trend line, okay? So, and remember, I marked this major level on the daily time frame. Had you done this on the 5-minute chart, it's a lot of noise, like I said, on the 5 minutes. So one of the things you'll find yourself doing is if you force these levels, it'll basically play tricks with you. You'll force trades, and you'll mark levels that are insignificant, and you'll be taking trades that are either false trades or not the best setups. You're reacting away from the major levels, and you want to be in those key areas where there's major decisions being made. There's a lot of volatility, and you're capitalizing off of that momentum right then and there, okay? So with Cash Chef, as you can see here, it even almost reached the second level that I created, which is at 0.7510. So hopefully you get the idea of this, and even just looking at the MACD, you can see here, look where price broke this trend line. You can see the MACD where the red signal line crossed over the blue. And as long as your MACD signals stay under the histogram, that also confirms your downtrend. So that can be part of a strategy as well. In iMarkets Live, that's part of our bounce back strategy, which works phenomenal. But hopefully this just gives you a starting point to understand how to mark up a chart. So again, what you're going to do is always start on the daily time frame. And the first thing you want to do is identify your trend. Is the market trending up or is it trending down? And then next, you want to just mark those key levels. And remember, you can go to the daily time frame, and you can either do it with, you can leave it with the candles, or if it makes it easier for you, you can turn it to a line chart. And all you want to do is find those tops and bottoms in the market. So when I say tops and bottoms, look for a bottom here, for example. You have another bottom here, for example. You have another bottom here, for example. And then you have a top here. You have another top here. And then when you're looking at these tops and bottoms, or you want to find areas where there were multiple touches. So for example, when I marked this area here, you can see that there were multiple touches. So price came to this level here, it broke through, and then it came here and it retested this level again, which became a significant level. Price visited this area again, came through, made its way back up to retest it. So it became a major level. So what this tells us is that if these are major levels, if we see price headed toward that direction, it could possibly retest that area again, okay? So hopefully this makes sense. Type in the comments if you have questions, if you need clarity on anything. I hope this gives you a starting point or an idea to understanding how to mark up a chart. Very, very simple. And as you expand your knowledge, you'll be able to do more. You'll be able to add other technical tools like Fibonacci or other things that may help you with stronger outcomes for your trading. So it's been a pleasure to go through this with you guys. I hope that it's very helpful. And I'll definitely see you in the next training. And we'll also do more continued training on marking up your chart and sharing things that can help you.